Here's a summary of SoFi's 2025 Q4 earnings call, designed for clear, spoken delivery. Introduction. Good morning, everyone. Today, we're diving into SoFi's fourth quarter and full year 2025 earnings. We'll focus on key financial metrics, management's outlook, significant risks, and highlight both the triumphs and challenges of the past year. We'll also hear the most important insights from our CEO, Anthony Noto, and CFO, Lapointe. CEO's opening remarks. Anthony Noto. Anthony Noto, our CEO, kicked off the call by declaring 2025 a tremendous year and the strongest financial performance in the history of our company. He emphasized SoFi's differentiated, one-stop-shop model, which allows members to borrow, save, spend, invest, and protect better. This model has driven nearly 50% compound annual growth from 2018 to 2025, expanding the member base to 13.7 million. Noto highlighted a fortress balance sheet, strengthened by $3.2 billion in new capital, giving the company significant optionality. He expressed great confidence in continued durable growth and superior financial returns. Key Q4 and full year 2025 financial highlights. Record member and product growth. SoFi added a record 1 million new members in Q4, reaching 13.7 million total, a 35% year-over-year increase. They also added a record 1.6 million new products, bringing the total to over 20 million, with a strong cross-buy rate of 40%. Record revenue. Adjusted net revenue hit a record over $1 billion in Q4, up 37% year-over-year. For the full year, adjusted net revenue was a record $3.6 billion, up 38%. Segment performance. Financial services and technology platform. Combined, these generated $579 million in Q4 revenue, up a substantial 61% year-over-year, now representing 57% of total revenue. Full-year revenue for this segment was over $1.5 billion, up 88%. Lending segment. Adjusted net revenue grew 15% year-over-year to $486 million in Q4. Full-year lending revenue was over $1.8 billion, up 24%. Record fee-based revenue. Total fee-based revenue across the business reached a quarterly record of $443 million, up over 50% year-over-year. This annualized run rate is now nearly $1.8 billion, demonstrating a shift towards more capital-light revenue streams. Record profitability. Adjusted EBITDA was a record $318 million in Q4, up 60% year-over-year, with a margin of 31%. Full-year adjusted EBITDA was a record $1.1 billion, up 58%, surpassing $1 billion for the first time. Net income and EPS. Q4 net income was $174 million, with earnings per share at 13 cents. Full-year net income was $481 million, and EPS was 39 cents. Tangible book value ended the year at $8.9 billion, with a per-share increase of $2.54 for the full year. CEO's vision and strategic initiatives. Noto emphasized SoFi's commitment to member focus and innovation, particularly in leveraging AI. He highlighted key growth areas, crypto and AI super cycles. SoFi is uniquely positioned to benefit from these trends, citing the national bank charter, tech-driven culture, and large member base. Product innovation. SoFi Pay, launched to provide fast, low-cost international payments leveraging blockchain technology, now available in over 30 countries. SoFi Crypto allows members to invest in dozens of tokens directly from their FDIC-insured deposit accounts, offering interest and protection. SoFi USD, stablecoin, the first national bank to issue a stablecoin on a public blockchain, positioning SoFi as an infrastructure provider. SoFi Smart Card, an all-in-one card and account offering rewards and credit score building, built in just 4.5 months. Brand building, significant investment in brand awareness through music and sports partnerships, including CMA Fest, Kelsey Ballerini, and NFL MVP Josh Allen, leading to unaided brand awareness reaching an all-time high of 9.6%. Lending segment strength. Personal loans are a significant driver, with SoFi originating approximately 15% of U.S. prime volume. Student loan refinancing also continues to deliver substantial interest savings for members. Home loans saw their best origination year ever, with an acceleration expected as rates decline. SoFi Invest expanded offerings to include private companies, alternative investments, and IPOs, driving a 2.2x year-over-year increase in brokerage revenue. Business banking, a new offering launching in 2026, aiming to be the bank for businesses transacting in both fiat and cryptocurrencies. CFO's Financial Deep Dive. Chris Lapointe provided a detailed financial breakdown. Full year 2025 recap. Record adjusted net revenue of $3.6 billion, plus 38%. Record adjusted EBITDA of $1.1 billion, plus 58%, with a 29% margin, and net income of $481 million, plus 2.1x excluding one-time items. Q4 financials. Record adjusted net revenue of $1.013 billion, plus 37%. Record adjusted EBITDA of $318 million, 31% margin, and net income of $174 million, 17% margin. This marked their 9th consecutive profitable quarter. Capital-light revenue growth. Financial services and tech platform revenue grew 61% to $579 million in Q4, and fee-based revenue grew 53% to $443 million. Financial services segment. Record revenue of over $1.5 billion, plus 88% YOY, with Q4 revenue at $457 million, plus 78%. Contribution margin was 51%. Annualized financial services revenue per product increased to $104. Loan platform business. A significant achievement, generating $194 million in Q4 adjusted net revenue, an annualized pace of $775 million, nearly tripling year over year. Lending segment. Record adjusted net revenue of over $1.8 billion, plus 24% YOY, with Q4 revenue at $486 million, plus 15%. Record total loan originations of $10.5 billion, plus 46% YOY. Capital markets and securitization. Strong activity. Selling and transferring $4.5 billion of loans in Q4 through the loan platform. Credit performance remains strong and in line with expectations. Personal loan borrowers have a weighted average income of $158,000 and FICO of 746. Annualized personal loan charge-off rate was 2.8%, a slight increase from Q3 but down from a year ago, attributed to portfolio mix and seasoning. Underlying credit trends showed improvement. Fair value marks. Personal loans marked at 105.7% and student loans at 105.6% at Q4 end. Balance sheet strength. Raised $1.5 billion in common equity in December, further improving the funding base and reducing funding costs by an estimated $110 million annually. Total assets grew by $5.4 billion in Q4, driven by loan and cash growth. Total deposits grew by $4.6 billion to $37.5 billion. Net interest margin was 5.72%. Regulatory capital. Total capital ratio at 22.9%. Well above regulatory minimums. Tangible book value grew to $8.9 billion. Management's forecasts and outlook. 2026 full-year guidance. Total members increase by at least 30%. Adjusted net revenue approximately $4.655 billion, 30% year-over-year growth. Adjusted EBITDA approximately $1.6 billion, 34% margin. Adjusted net income approximately $825 million, 18% margin. Adjusted EPS approximately 60 cents per share. Q1 2026 guidance. Adjusted net revenue approximately $1.04 billion, 35% year-over-year increase. Adjusted EBITDA approximately $300 million, 29% margin. Adjusted net income approximately $160 million, 15% margin. Adjusted EPS approximately 12 cents per share. Medium-term outlook. 2025 to 2028 compounded annual adjusted net revenue growth of at least 30%. Compounded annual adjusted EPS growth of 38% to 42%. Segment guidance for 2026. Financial services. Revenue growth of 40% or more. Lending. Revenue growth of approximately 23%. Tech platform. Normalized revenue growth of approximately 20%. Significant risk factors. While not explicitly detailed as a separate section, risks alluded to include macroeconomic conditions, interest rate fluctuations, and economic growth are key assumptions. Competitive landscape. Competition within Fintech and traditional banking remains intense. Regulatory environment, particularly concerning for crypto initiatives, with reliance on OCC interpretation letters. Execution risk, the ability to successfully launch and scale new products and services. Market sentiment, changes in investor sentiment and capital markets can impact funding and valuations. Highlights, record financial performance, exceeding historical performance in revenue, EBITDA, and member growth. Differentiated one-stop-shop model, demonstrating its effectiveness through strong cross-buy rates and member engagement. Innovation in crypto and AI, proactive and aggressive moves into emerging technologies with significant product launches. Strengthened balance sheet, successful capital raises providing flexibility and enhancing financial stability. Strong brand awareness growth, significant improvements driven by effective marketing strategies. Capital-light revenue growth, increasing reliance on fee-based income from financial services and tech platform. Robust lending performance, continued strong originations and manageable credit risk. Lowlights. Loan platform client transition, the departure of a large client from the tech platform business, though normalized in guidance. Personal loan charge-off rate increase, a slight uptick, primarily driven by portfolio mix and seasoning rather than credit deterioration. Limited M&A activity. While the bar is high, the company has not yet found suitable acquisition targets at attractive prices, indicating a preference for organic growth at this time. Important statements from CEO and CFO. Anthony Noto, CEO. 2025 was a tremendous year on all fronts. Our member focus drove an unprecedented level of innovation across our business that led to the strongest financial performance in the history of our company. We come into the year with a differentiated one-stop-shop model with a full suite of products that allow members to borrow, save, spend, invest, and protect better. SoFi USD will be a game changer for our business as it enables us to be an infrastructure provider for banks, fintechs, and enterprise platforms, positioning us at the center of the crypto ecosystem. We are just scratching the surface of the opportunity that exists across each of our existing products and the newer areas like crypto. Chris Lapointe, CFO. We finished the year strong with a great fourth quarter. This was our 9th consecutive profitable quarter. An important driver of our growth was the increased contribution from capital-light, non-lending, and fee-based revenue sources. Our credit remains strong, performing in line with expectations and driving attractive returns across all loan types. We expect to deliver compounded annual adjusted net revenue growth of at least 30% from 2025 to 2028. Conclusion. In summary, SoFi delivered a record-breaking Q4 and a stellar full year 2025, demonstrating strong execution across all fronts. The company is well-positioned for continued growth, driven by its innovative one-stop-shop model, expansion into new technologies like crypto and AI, and a fortified balance sheet. Management expressed significant optimism for 2026 and beyond, backed by ambitious guidance and a clear strategic vision to help members achieve financial independence.